All right, so get this. We're diving into Forex trading,
Oh,
but not just like the basic stuff. We're going deep, deep undercover today to figure out how to potentially predict where the market's going to go next using this thing called weekly bias. Have
mhm.
you ever felt like the big players in the market, the institutions are always like one step ahead?
Yeah, definitely.
Yeah. Well, our source for today's deep dive is this guy, the Inner Circle Trader, ICT for short. And he claims they leave clues.
Oh,
Yeah. We're talking like breadcrumb trails on the weekly charts that if we learn to read them could give us a serious edge in our trading. So his YouTube video is on our table today, and let me tell you, the guy does not mess around. He breaks down this whole strategy about how to use the weekly charts to potentially see what's coming next. So
yeah.
to kick things off, can you walk us through this whole weekly bias thing? What exactly is ICT talking about?
Yeah, so basically, think of it like this. Institutional traders have massive buying and selling power, right? So ICT's theory is that when they make their moves, they leave these like footprints on the weekly charts.
Footprints.
Yeah, and by studying these footprints, these patterns, he believes that we can anticipate where they might be headed next.
So it's like being a detective, but instead of fingerprints, we're looking for what? Trading footprints.
Exactly. And those footprints are the clues to the weekly bias. Are the institutions leaning towards buying this week, driving the price up?
Okay.
That's a bullish bias. Or are they selling, pushing the price down? That's your bearish bias.
Okay, I'm starting to get the picture, but then ICT throws out this term Judas swing, and I'll be honest, it threw me for a loop. What's so Judas about it is the market betraying us.
Well, it can feel that way if you don't know what to look for. Imagine this, the market is showing a bullish weekly bias. Everything points to the price going up. But then, bam, early in the week you see this sudden drop.
It's like a fake out.
Precisely. It's designed to shake out inexperienced traders. They see the drop, they panic, and they sell their positions thinking the bullish move is over.
And I'm guessing that's exactly what the institutions want them to think.
You got it. They use that drop, that Judas swing, to gobble up those positions at a discount. It's like a magic trick, a cleverly disguised maneuver to catch people off guard.
Wow.
And here's the kicker. Once they've shaken everyone out with that Judas swing, the market often reverses and continues on its merry bullish way.
So those who held their nerve,
Yeah.
who understood the weekly bias, they're the ones laughing all the way to the bank.
Exactly.
Yeah.
And that's the power of this approach. It's about seeing the market through the eyes of the institutions,
Yeah.
understanding their tactics and using that knowledge to your advantage.
Okay, that makes a lot of sense. Now let's get into the specifics of how to actually spot these bullish and bearish setups. ICT gives us these visual cues, these patterns to look for on the charts. So let's start with bullish. What are some of the key things we should be looking for?
Well, ICT, he's all about that Sunday open. He says it's like a line in the sand. If we're looking at a bullish setup, he wants to see buying opportunities emerge below that Sunday open, ideally between Tuesday's London session and Wednesday's New York open.
And he actually shows an example in the video, right? There's that trade on the euro dollar where he calls out the setup almost perfectly.
Right, and that's what makes this so compelling. It's not just theory. He's demonstrating these concepts in real time using real charts, which is incredibly valuable for traders of all levels.
Absolutely. Now, what about the bearish side? What does a bearish weekly profile look like?
It's basically the inverse of the bullish setup. We're looking to sell short above that Sunday open, again, aiming for that Tuesday-Wednesday window.
So thinking back to the Judas swing in a bearish market, that early week fake out would actually be a surge higher right, suckering in all those hopeful bulls before the drop.
Exactly. It's all about playing on those predictable human emotions, fear and greed. The institutions know most traders are looking for those quick wins, so they create the illusion of an opportunity only to pull the rug out from under them.
It's almost devious, but hey, if you're on the right side of the trade, it's not so bad. Right?
Exactly. Knowledge is power in this game.
Speaking of knowledge, ICT talks about risk management, and I know our listener is probably eager to hear about that. He emphasizes two key points, stop losses and partial profits. So let's break those down. What's his take on stop loss placement?
He's accurate about setting your stop loss before you even enter a trade. This should be a predetermined level that makes sense for your risk tolerance.
Right.
And once it's set, you don't touch it.
Discipline, discipline. It's easy to say, but so hard to do when you're in the heat of the moment.
It's true.
Yeah.
But that's where having a plan, a strategy really comes into play. Trading shouldn't be emotional. It's about probabilities, risk management, and sticking to your plan even when things get uncomfortable.
And that's where partial profits come in.
Right,
Yeah.
exactly. Don't be greedy. ICT recommends taking some profits off the table as the trade moves in your favor. Let's say you're aiming for a 150 pip profit. If the market gives you a 100 pip move, why not lock in some of those gains?
Because a bird in the hand is worth two in the bush, as they say.
Precisely. You can always move your stop loss to break even or trail it up as the trade progresses. This way, even if the market reverses, you've secured a portion of your profits and minimized your risk.
So we've covered the concept of weekly bias, the importance of identifying those bullish and bearish setups, and of course the crucial role of risk management. But one thing that really jumped out at me from the video was ICT's mention of consolidation periods. Those times when the market seems to be taking a breather before making a big move. He even drops this classic trader saying, the bigger the base, the higher in space.
Right. I love that.
It's so true, though, isn't it? Those periods of tight consolidation, they're like a coiled spring.
Yeah.
The market's just building up energy, waiting to unleash. And ICT is suggesting that by combining our knowledge of weekly bias with these consolidation patterns, we can potentially anticipate those breakouts before they happen. That's like next level trading.
It is. It's about connecting the dots, seeing the bigger picture.
Yeah.
Imagine this. You've got a currency pair that's been stuck in a tight range for a couple of weeks, almost like it's asleep.
Okay.
But then you start to see hints of a bullish weekly bias emerging. Maybe the price action is bouncing off that Sunday open like it's a trampoline.
Yeah, that's our cue. The market's whispering its secrets, giving us a heads up that something big might be about to go down.
Exactly. And when that breakout from consolidation finally happens, you're not caught off guard. You're ready to ride that wave because you were reading the market's language, you saw the signs.
This is incredible. We've gone from feeling lost in the woods to having a treasure map in our hands. We've covered so much ground, the concept of weekly bias, how to spot those bullish and bearish setups, and of course the importance of protecting ourselves with a solid risk management plan. But remember, this is just the tip of the iceberg. ICT goes into even more depth in his mentorship program, and there's always more to learn in the world of trading.
Absolutely. This should give you a strong foundation, a new lens through which to view the market. But the real magic happens when you start applying these concepts, testing them out, and seeing what works for you.
So to our listener, here's your challenge. Go back, rewatch that ICT video, and start looking for those weekly bias clues. Put your detective hat on and see if you can spot the patterns, the footprints of the institutions. Until next time, happy trading.